Well, the massive rallies that we started this week off with petering off somewhat. What are you making of the market movement that we're seeing, though, where if we look at the JSE more specifically, we're already off morning lows?
Yes, no, we started about 200 points down and we came all the way back to being positive earlier and a little bit earlier. We're just starting to taper off again, but profit taking coming into a very strong week in the JSE. We see Anglo's trading above 310 levels, so people are starting to take a little bit of profit taking in the market, but it's been a very good week generally on the exchange.
The strong dollar, of course, standing squarely in the spotlight today. I mean, this in a week where we saw US Treasury Secretary Geithner affirming the US strong dollar policy in a signal that maybe the US dollar weakness has been a bit overdone and gone too far. Where do you see this going?
Well, if you take a look on the technical graphs, 150 against the euro has been very strong resistance, and it hasn't been able to really break through that properly. So I think on a technical level, the dollar looks like it probably reached its weakest point at around that 150 level, and it looks like it's coming back from that. Secondly, the economy in the States looks like it's going to be a slow recovery, but people are going to take a little bit of profit away from the emerging markets, and that should put some strength back onto the dollar.
For now, what we're seeing play out with the dollar really putting pressure on the commodity prices and by further extension on our resources sector as well. But then again, Anglo's trading in positive territory. How are you playing the commodity heavyweights at the moment?
It's a bit difficult, obviously, with the weaker dollar. The commodity prices were very strong and now starting to come off slightly. I think that you're taking a look at China to play these big commodity companies like Billiton and Anglo-American. China says that they look like they're coming out of recession and looking relatively positive, although they do say that the recovery will be quite bumpy recovery and not just a smooth recovery upwards. But I think you have to look at China and see how much they will be importing if you want to make a play on Billiton and Anglos.
Of course, if we look at gold specifically, I mean, gold's going through the roof. Production is a problem. We had mining data yesterday certainly reflect that. But at the same time, we've got a player like BHP saying last week, I think it was, that repair work was being done at its Australia's Olympic Dam uranium and copper mine, and that it's on track for full production between January and March next year. I mean, investments like these don't get made willy-nilly, and it certainly says a lot about the confidence a company like BHP has, for example, in prospects moving forward.
Well, that's a very big project, Olympic Dam, and some of the best copper deposits in the world at that Olympic Dam. It's obviously a very long-term investment for them, and I don't think they'll just close down a mine like that. And I think obviously going forward, these miners have 10 to 15 and even up to 30-year outlooks. And going forward, obviously they do feel that the recession will end at some point, if it's not ending already. And I think that just shows you how much infrastructure spend goes into these long-term miners, different compared to our South African gold miners that are closing down a lot of their marginal mines and smaller projects.
As you mentioned, China is saying that this recovery process is going to be slow and gradual. We've got Europe having made the same, or comments out of Europe reiterating some of the same sentiment. We've got European GDP data out a little later. What are your expectations on that front?
Well, I think I just saw a number come through just before we got onto screen, and it was slightly less than expected. Though expecting a growth of negative 3.9, I think it came in at 4.1 negative, so I think slightly less, not as good as they were expecting. And the German GDP also came out, and that was just slightly worse as well. So just goes to show you that although we're reaching a bottom, we could still be at this low base for a while until the recovery starts on a smoother path.
Well, in the meantime, we've had Richemont's chairman, Johan Rupert, saying that he expects the U.S. economy to improve quicker than expected. What did you make of the announcement made this morning that Johan Rupert will take over from Norbert Platt as chief executive?
I think obviously I think he wants to step down from some of his positions that he's held, and I think it's fine that they've got a good succession plan at Richemont. Quite interesting though to see that he thinks the American economy will improve better than expected. We've got US confidence figures, business confidence coming out later today. I'd like to see if that is similar to what Johan Rupert has to say there. Obviously if that American market does start to improve in the luxury goods market, it will be obviously a very big market for Richemont. But then again, they're also looking Japan and Asia as the real drivers for this economy to come, for the world economy to repair itself.
Despite the bad patch we've been through, I mean, we've seen the company reporting higher than expected first half net income. How's the market reacted to those? And what does it say about having good management, but also stable management in place through these economic downturns?
Well, I think if you do take a look at Richemont as an example there, your management is very, very important. If you take a look at the banks and what's happened to them overseas, a lot of them have had big shifts of senior management, losing management, and obviously in a bumpy period you want some type of consistency, and the management teams in crises like these, very good management teams, those companies always outperform, and when the market does recover they perform better than everybody else because they're coming from such a sound footing. So you have to really look at management in difficult times like this.
Let's take a look at MTN. Also in the headlines, interconnect fees dropped by an initial 31 cents from February and March next year. That's showing that share price showing the effects of a compromise that was reached there, it seems, because MTN's share price is up from R1.12 to R1.20. I mean, the market, of course, had priced in the worst, it seems, on that counter. What's your outlook for MTN?
They did. The market had pushed that price down, and I think there was a lot of uncertainty there. Was it going to be 50%? Was it going to be 30%? It looks like it's come out around 30% to those interconnect fees, around 30 cents. I think it's going to make about a 2% reduction in income for MTN. It's about 4% for Vodacom. So Vodacom's slightly worse off in that environment. I think people may be switching from Vodacom back into MTN with those interconnect fees coming out, and there's consistency. At least they know how to budget, how to change their models going forward. So a lot of money came into MTN from yesterday. We saw it was at a low yesterday of 112, as you said, and traded all the way back up to 120 today. So I think people are just happy that there's certainty over those fees, and going forward they at least can put those into the models and see and get good projections for the next year or 2 years, and looking relatively positive now for the flow coming into MTN currently.